This is a continuation of the series of videos that I've been basically tracking this GBP USD opportunity, and obviously many of you have noticed that this pair has been declining lower and lower. We're looking at this in various aspects as like a smart money trade. If some of you are wondering what smart money trade is, then I hope that in the process of this series of videos you get some idea of what it is. And today we'll be trying to put together like a decision matrix of how to consider an opportunity with all angles considered. And when I say all angles considered, we're looking at very a variety of things. We're looking at obviously what's going on the fundamental side, and also what's going on the technical side. And we're looking, and when I say technical, this also would correlate with other asset classes that could be having some indications. So specifically, let's start with talking about one of the interesting events that happened today. Okay, first and foremost, all right, there was what I've been looking out on this pound USD is a break of this trend line, and when that happens, obviously we notice that there's been a lot of bullish divergence. So once this trend line is broken, we could see a very strong run. Now, over the past 1-2 days, actually what would have been a very wise move on hindsight would have to be like a hedge. So I did mention the concept of a hedge in that Go Trading video as well. So I personally wish that I had applied that, but I did not. But a hedge would have been nicely deployed at, say, 126. So for example, maybe like 20 points beneath 126, say around the 125.80, that would have been a good spot to do a hedge. And say once it goes off for a round on the round number, we could possibly cash in that profit. That's one method of doing it. So actually the account balance goes up as a result of the hedge, and continue to hold on the existing trades. And another way of handling a hedge is to wait for a break of the trend line, then only we release that hedge. So what that really serves to do is to keep the P&L at a gridlock until conditions stabilize. Okay, so now we're looking at this break of the trend line, and what is the reason for this current hour candle to come down. So for this, I want to refer to the USD JPY, where we had like a ridiculous spike, and the reason for this spike is a decision on the side of news. And so it says the Japanese yen is quickly weakening after this BOJ monetary policy announcement, and fading as much as 1%. So a rapidly falling currency, and what is this, and why did this happen? Okay, so this is what they say, a dovish hole scenario. Okay, it's a very peculiar and sensitive topic to discuss. The Central Bank of Japan decided to preserve the interest rates, and preserving interest rates instead of increasing them, which has been the case for the rise in the US dollar lately, is basically there to help the local economy. Because if the central bank of that country, Japan, is preserving the interest rates, what that really means is that people are able to spend with a low interest rate, and if the interest rate goes up, while interest rate goes up, that would often be to combat inflation. Inflation is the rise in the cost of goods, and basically when the interest rate is adjusted down, when the cost of goods is high and the interest rate is high, what eventually is going to happen is that people are going to stop shopping. But even when the retailers drop their prices, they reduce inflation, restaurants cut back their prices, it does not mean that people will automatically go and spend again, because they're thinking that, I've still got all these bills on my credit card, I still got all these mortgages, and it doesn't make sense to spend more. But let's say if the interest rate is also reduced, then yes, people may consider, yes, okay, I'll refinance a house, I may change a car, basically to come out and spend again. So interest rate and inflation really go hand in hand as a solution. And at this point of time, what people see as dovish for Japan, but for the people in Japan, it could actually impact the cost of import goods. But then again, if it's for local produce, there actually really is no effect, and it actually means that their ability to continue to purchase locally and stimulate the local economy is actually better because of the lower interest rate. And so at this point of time, I think the Japanese economy is prioritizing the stabilizing of the local economy. So I do not fault them for this, but traders on the market are actually perceiving this differently. They are looking at it as a continuous slide. Okay, so that is the reason for this sudden spike in the USD JPY. But if we do look on the shorter term, there already is like some pullback, and I I actually hope that this would have a fever effect on the market. What I mean by a fever effect is like when we have a fever, our body temperature goes up. And why do we even have a fever to begin with? Maybe there's infection. And by raising the body temperature, the body is able to naturally kill these infections, and as a result, have the fever as a body as these viruses are killed from our body, and the body is able to function more normally, and the brain, the central nervous system, detects that, then our temperature restabilizes again. So with sudden spikes in the price, this can also trigger, like some of the stabilization. And if you notice on the front of divergence, it's always, the more we have a sudden spike down, that would result in, the bullish divergence. And in this case, I would think that the bearish divergence will be somewhere around the corner. We do not absolutely need the bearish divergence to happen on a certain time frame, but it's at the end of the day, it's just a metric for things to happen. And we stick to a very old concept of goes what goes up fast will come down fast. What goes down fast will come up fast, and what goes up slowly will come down slowly as well. So if we look at the continual rise of the USD JPY over a period of time, I would say that yes, like based on this theory of what goes up fast will come down fast, will only apply to what has happened very recently. So I do think that it will reclaim the 128, 127 before we know it. But is it going to come down to 124? That's going to take some time because it took quite some time to get there in the first place. Now, we go back to the watch list over here, and like I would be looking at a couple other things as well, and like right now the general market is in a risk off, and at the same time, risk off, what that means, when people are into risk aversion, through the years people have always gone into US dollar, and as a result the US dollar index is stronger than ever. But again, if we consider how much it's risen in just this past month alone, it's been the result of what has previously taken, years to achieve. You look at how much it's gone up in a recent amount of time. It's immense. Okay, then if we now look at a lot of the other things that we see here are actually working very, very inversely. Like the Aussie USD has been taking a serious beating over the past week, and now I would like to discuss that as well, with regards to, okay, this Aussie USD did have an effect with the USD JPY. It's just a simultaneous thing, right? And now we see that it's setting up for more divergence as well. Divergence is basically like higher highs in the oscillator, and at the same time lower lows on the actual market. Now we look at the US tech. Why am I looking at US tech? Okay, US tech is actually, the US tech stocks index, top 10, 100 stocks. And this has been having, like a lot of negative correlation with the US dollar index as well. So US dollar index goes up, this goes down. But, when you see them going up, when we see them going in the same direction simultaneously, then I think something is going to happen. I always felt this way. I always believe the same thing. And Bitcoin as well. Okay, there was not that swing down. So Bitcoin has been under a lot of challenge this past week, and we had like surprise drop as well from the around 41 down to 38, but they made it back up very quickly. Also see the divergence here as well. Looking at gold, I personally would expect gold to reclaim the 1900 very quickly, and I strongly believe, whatever we're seeing here is manipulation. And under the circumstances that the current inflation in the US is like 7.8%, and yet Federal Chairman Powell announced the rate hike yet again of 50 basis points. Like, I'm not sure how the Americans are taking it. Maybe if you're listening into this video, you may want to comment. How are you taking all these rate hikes? Okay. I don't think it's a long-term strategy, and so-called this tightening controls eventually would result in weakening of a pair. It's just like how you would accelerate or slow down. It's the same thing. So I expect this to reclaim the 1900 very soon. And the logic of things going up or coming down is simple. Okay, notice that when there has been a lot of overbuying or overselling, then in this case, we look at this instance of overselling. People get conscious of, how far is this going to go? And, should I still sell? It gets to a point. Like, yes, there are people who are late to the party, and there are also people who made some money already, and they start to want to take profit. Okay, when they take profit, they have to exit these positions, and then when that happens, people start to see that in the marketplace, the balance of net short versus net long changes over time, and then that results in a shift in momentum from a negative bias to a positive bias. So if you would like to check out more on topic of inflation and interest, I think this is a really good topic to check out. I'll put a link in the video description as well. And as you can see, so in general, high interest rates are a policy response to rising inflation. And when inflation is falling and economic growth slowing, central banks lower interest rates to stimulate the economy. So coming back to here, what I see is that, at this point of time, I find that Bitcoin is a very good yardstick to risk appetite. And like, if Bitcoin rises when the US index is going strong, I see that this would actually lead a turn of tides for a risk appetite. So I think it's actually crucial at this point for Bitcoin to reclaim 41,000, where the trend line is, and to actually surpass that is very, very crucial at this point. I see that US tech has been very strong as well. So that actually means that people are starting to invest again in stocks. And again, I would say that it's important for this to reclaim 14,000. I look at a new cryptocurrency, Lunar, and this has been, it bottomed out quite low a week ago, but the irony is throughout this entire week it had been holding very firm. So I do see that there is a shift in mindset, and there is a indifference, and I do feel that the risk appetite is slowly returning. I see exhaustion on the selling side for this, and we also see a building divergence coming on as here as well. So today, I think for those who are looking into a pound USD trade, and pound USD has been my favorite Forex pair. Just that this has been one of the longest protracted drops, like consecutive drops for the period of a week. Now, I want to share as well an insight that I've been observing is that usually the sentiment of a day it can be told in a daily candle. So if that daily candle starts off bearish, it's probably going to be that way for the entire day. If it starts off bullish, it's probably going to be that way for the entire day as well. And now we see like shortening of these happening. So it's very easy to see that sellers are getting conscious, and at the same time buyers are waiting on the sideline. So the balance is shifting, and we're waiting for that shift in balance to happen. The other thing that I want to share as well is that when we look at the weekly candle, the same logic applies as well. So if we see it green, it will probably be green for the entire week, and if it is red, it will be red for the entire week. And this is all decided very early in the day for the daily candle, and for the week for the weekly candle. So what this means is that if we start out on the month, remember how market closes on a Friday? If it closes very low, usually for the next week, maybe if a corrective trend takes place, it will take place for the entire week. But if if there's a continuation on the Monday, it's probably going to continue for the entire week as well. So on a hindsight, hedging could have come in earlier, or maybe even cutting position and going on to a put and waiting later part for the smart money. But at the same time, very, very important. Why is this smart money concept of trading as well? Is because what's important to know the smart money concept of trading is because the smart money is where the big boys really come in to come late to the party and to go contrarian. And in some cases, they're actually able to swing the market in their favor. And it's also like holding with the knowledge that the tides will turn, and doing it in such a way that you actually have staying power, which is why I emphasize the use of small lot sizes, low leverage or no leverage, and for some of you even mini accounts or cent accounts, if depending which part of the world you're at, and that's all you're able to trade with. Now, at this point, finally, as well, I wish to address that when you go into the smart money concept, is a lot of it's also stop hunting. So a lot of stop losses going to get hunted, and what that creates is that people who have been selling on leverage, or people have been buying on people have been buying on leverage, they're giving up the positions. People who are buying the options are unable to hold them, and let's say if people have been buying with options, and then the value has these options has greatly decayed in some cases, people can then buy them over for cheap and actually make nice amounts with it. So that is important to know the smart money, so that you don't get actually taken for it. One of the best ways was what I discussed in the beginning of this video, which frankly should have applied on this setup as well, hedging, because hedging is a very good way of, like I said, keeping it into a gridlock and releasing when the ideal conditions appear. Okay, so at this point of time, my final thoughts for this video is that the current trends are likely going to last till the end of this week. So we're late in the week. This is a Thursday in the Asian time zone. There should not be very much further surprise for the balance of this week. And going into the next week, then we should see more turning of tides, and especially if if not in the next week, then probably the following. And the reason why I say that is because everything is relative. It has been going strong and relentless for a period of time, and it would probably take some time to stall and find the equilibrium before deciding what's going to happen next as well. All right, thanks for watching this video.